Hey Mike, it's September 10th. I just want to show you real quickly before the trade kind of sets up. And right now I'm looking at the gold. But so just kind of show you like the type of trade that I'm going to look for is this is probably the most highest probability trade that I would take. And usually it's the sideways range where it just goes up and down, and you got like highs and lows all day, and it's pretty tight, right? And it's pretty much all day. And then usually during the market open or after a news event, you see it drive to one side, and after it does that, it'll come back down and retest this area that it broke out of, and then I'll use the market profile levels to buy back into the market in this case if it does break out. So it should kind of push off to the upside pretty good, and then come back down. And the first time I test that area and I see it start pushing away, that's when I'll buy. So these are kind of like the highest probability trades that I'm going to take. So I wanted to show it before it actually happens, and then when the trade actually does occur and I get into it, I'll restart the video, and I'll kind of narrate through it and take profits and so on and so forth, and talk about the risk management aspect of it. So just want to talk about that real quick and then give you a quick example of how I'm going to trade. And then on oil, like we have an uptrend. So in a market like this, you know, it's a little bit more difficult, but really I'm going to look to buy. What I normally would do for my account is, if it's an uptrend like this and I see a deep pullback like this, where it actually broke this profile back here, I would have bought back here at the 44.18 and watch this thing try to get to the other side to make another high. And I don't know if this thing works on the Fibonacci retracement, but that was about a 50% retracement. You know, 62 to 76 is usually the best, but it's really what lines up with market profile. So this market profile level right here, 44.18, was as closest to the 44.15 here on the Fibonacci retracement, and then you know, it's pushing up. So again, it only, these things work not necessarily independently, but together they make a higher probability trade. So that would have been a trade that I might have taken right there. But again, main thing example is just to show you that you know, this is how I'm going to trade, this is the methodology, and kind of give you an example before we really get into this. So let me go ahead and pause the video, and then once gold kind of sets up, and it looks like it is right now, it's starting to push up, so that's good, and we're breaking out of this range. Hopefully get a nice push off of that, and then we can kind of trade from there. So right now on the white charts for the indicator that I use, you can see the same thing. Let me blow both of these up, but see how it's just kind of been ranging up and down inside the profile. This one's more accurate because it's developing as you go. The other one on the other chart, Thinkorswim, same thing. It just doesn't develop like as smooth. So this algorithm is a lot better from what from my experience. That's why I pay for the program. But so you see now that broke out, it's pulling away, and eventually it's going to come back down. And when it does, you're going to have these dots kind of form, which show the Fibonacci retracements from the low to high, right? It's going to measure it itself based off of, you know, however this guy put the math together, but it's a lot more accurate than eyeballing it from my experience. And what is going to happen is going to come down and probably have these dots form right around in front or on top of this market profile level, this red, which is a high value area, or HVA we call it. And once it does that, and we see basically the same thing, we'll see this little pullback, we'll see it start pushing away, green arrow, black line, and then in the case of a really strong move, we'll see another green arrow like this kind of appear, showing that there's a lot of the price structure is now starting to move in the buy direction. So those are really good trades, or confirmation really. And then that's kind of what we're going to look for when I want to buy at the market profile level. So that will be like the highest or best kind of trades. And if it breaks to the other side and breaks right through instead of stopping right here, then we'll have to look on the other side. But the main thing is, because we're in a flat market right now, where the moving average is pretty much flat, we've just been ranging up and down in this tight range. Once you kind of break out, you usually see some pretty good movement either way, either side. So we'll look for that, and I'll go ahead and pause the video. Sorry it took so long to explain all that. I'm trying to be as quick as possible, but once I get into the trade, hopefully I can give you a pretty good example of how this stuff works, and we'll go from there. Alright, I'm gonna go ahead and pause this video. It's only gonna take a second. Obviously, when I re-record it, I should probably be in a trade. Alright, I'll talk to you in just a second. Alright, back. We have our first setup on gold. It wasn't quite the deep retracement that I was looking for, but it did move away once I entered it, so I'm gonna just kind of let this thing go and see how far it's gonna go, and maybe cash in a little bit, and we might see another pullback. But it looks like it's moving pretty fast now. But gold kind of fluctuates back and forth. But anyway, the point is, you see it break out, it comes back down to an area, whether it's market profile or this area here, which is developing value area, and it didn't break below here, and was able to push off from there. So so far 4 contracts, 720, 680, 720. So looking for this thing to at least hit about a 2-to-1 reward risk ratio, and I'll take off at least 2 of the contracts there, and see if this thing really gonna push off from there even higher. But main thing here though is, like, it could come back down and retrace even deeper, and then we could take another trade there. But the main thing is, if it does come back down close to our entry, you know, I already have my stops moved up, so I can't lose any money. If anything, I'll make, you know, a very small amount, but we'll be able to cover that in just a second. So entry was at 11.10.2. We're now at almost 11.12.2, which would be a 2-to-1. So actually, one of the contracts here I could have taken off, so because we did actually hit the 2-to-1 reward to risk right there. And we just look for this thing to just keep pushing higher. But like I said, the main thing is in a sideways range right like that. So filled that one. Looking for this thing to push up a little bit higher. Lock in whatever we have left, and then have that one that we have up there as a runner, and just see how far it's gonna go. And then obviously, you know, have the stop down at the entry in case it does come all the way down, and we're not gonna lose any money. We're still gonna break even on that last contract. So but hopefully this kind of illustrated, and let me pull up my other chart here. So you can kind of illustrate, you know, you have a sideways movement like this, finally breaks out, comes back down, and you know, retraces or does a nice pullback, and then you can see that thing kind of push off. So similar kind of what happened yesterday. We had a little range, started to kind of down move in that direction, finally broke out below here, which is the previous low, came back up, retested it, and that was, you know, we had a huge move after that. And the short was around 11.21 yesterday. So I just want to share that real quick. We go ahead and pause the video, and if this thing keeps moving, we'll be good to go, and I'll restart it and see if we hit our target. So 13.2 is my next target. And again, the entry was at 11.10.2. It moved pretty quickly as it kind of bounced. But the main thing is, when you have momentum like that and it actually starts pushing away after it hits a level, you can see that it really doesn't pull back a whole lot during that entry. That's why you have that 13 tick stop, just in case the market's waning. But if price really starts to move, and you can see right here, when the entry signal came in, you saw that the second triangle, you know, like I said, usually you have that momentum that really pushes it through. It shows that there's 900 off of just 3 contracts left, almost hitting that target. But this arrow really indicates that there's price, you know, flow and moving in that direction. So, all right. So that was a 3-to-1. The first target, that first contract was a 2-to-1. Now we're at 3-to-1 reward to risk ratio, and then we let the other one just kind of go up and see how far we can go. And I might hit it pretty quickly actually. So move it to, because there really isn't a whole lot of resistance besides where we kind of entered at yesterday, at like maybe 118 or something like that. So we could see this thing kind of move up, maybe at least up to the 118, I would say. So what I'll do is I'll just go ahead and set maybe my next target at the 118, or maybe even one tick below there. So at an entry price of 11.10.5 or 11.10.2, got my stop up moved, and I'll just keep moving my stop up, you know, so I can at least lock some in, because if it is going to trend, it should just keep moving pretty directional. Like yesterday, you see it kind of just stair step as it went down, so you just kind of take it to the next level that it really pushed lower from, where those dots are at. Same thing, similar today. We'll look and see, okay, where did it really push off of here? Probably the next place to move my stop if this thing really pushes up again. And it should be relatively easy to kind of capture at least another $100, because right now it's about $100 away from here, which is 10 ticks on gold. And I'm looking for this thing to really push up to the next level, and hopefully hit 118. So we'll see what happens there. But hopefully that kind of illustrated the trade and how high, you know, the high probability trades that I was looking at. You can see that from where it broke out to when it retraced, it pretty much almost made you know, doubled that move, almost more, a little bit more than that. Show on this chart. It's a little harder to see on this chart, but so moved about 40 ticks, came down, retraced about 20, and then moved another 10, 20, 30, 40, 50 ticks actually. So doubled that move from when it first broke out. So that's a nice way to kind of tell how much it might extend out to. But there's different ways to kind of scale out. But bottom line is, was able to profit off of that trade, and that's a high probability trade that I look for every day. And usually when it's real tight like that and finally breaks out, it has a pretty solid move to one side. So I won't bore you with this last contract again. Even if it does come back down, I'll lock in $100. But if it does move up, you know, that's another 110. I mean, 2, 3, 4, about another $500 on top of this. So you know, another $700 just from this one last contract. So that's so far the 3 contracts that we moved. That's an $800 move. Risked about $400, a little bit more than that, with a 13 tick stop, but never got stopped out. So pretty much doubled that. So that was a, you know, a 2-to-1 reward to risk ratio, just off the 3 contracts. And then in this case, if I let this thing kind of run and make another $700, you know, then that should add to that total to about, you know, maybe a 4-to-1, at least 3-to-1 to 4-to-1 reward to risk ratio, depending on how much further this thing goes up to. And again, you know, there's different ways to kind of scale out, but the main thing is, you know, I scaled out my first, at least at the 2-to-1 reward to risk ratio, it popped up to the 3-to-1 reward risk ratio, and then the last one I just kind of let run and see how far it goes, because it might retrace back to here right now, and then it could continue pushing up. But you know, if it does hit my stop, I lock in at least $100, so that's a $900 trade, only risking about $400, so at least double the amount of risk right there. And first trade of the day, keep it consistent, stick with the plan, and just let it kind of work out for you. So hopefully that kind of captures everything. I know it took a long time, but that's what I'm trying to refine here, without making these videos way too long. But I'll go over, like, you know, I'll put together some kind of plan to kind of put this all together and have a system in place so I can actually you know, comment and capture all this. But main thing is that's the setup, and that's pretty much how I trade. And hopefully this thing can capture everything that I want to accomplish, and really appreciate the support that you're giving me right now. With that, I'll close the video out and talk to you soon. All right.